Nobody's talking about the 30-year bond yield, even though it should serve as a major warning signal for investors like you and me. My name's Russ, and I've been creating content on the stock market for 6 years, and in those 6 years, I've never seen something like this before. Because the US 30-year bond yield just hit 5.337%, the highest it's been in 19 years. But if you don't know what that means, don't worry. That's why you follow me. You see, the 30-year bond yield is just another way of saying this is the interest rate that the government is willing to pay regular people to borrow money for 30 years. And right now, the government's willing to pay us 5.337% in interest, the most they've been willing to pay since 2007. The year before the global financial crisis started that sent the NASDAQ down 56% over the next 2 years. Which is the exact reason why tech and AI stocks like Nvidia, Micron, Intel, and SanDisk all got crushed yesterday. Because as interest on 30-year bonds get higher, investors start to reconsider where their money should be invested. Should it be with those risky growth companies whose returns are so inconsistent, or should it be invested into a bond that will pay out 5.3% every year for 30 years? And as investors make their decision to rotate their money into the safer investment, those growth stocks that I mentioned begin to fall. Which is exactly why the Treasury decided this morning to go into the market and buy back bonds it already issued to remove supply from the market and increase demand. Now, this buyback caused the 30-year bond yield to back off for now, but this is clearly still a developing story, so follow for updates.